Hello, everybody, and welcome to Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm joined by Peter Schiff, Chief Economist and Global Strategist at Euro Pacific Asset Management, and the host of The Peter Schiff Show. We're going to dive into his forecast for the gold and silver markets in 2025, get his thoughts on the progress DOGE has made so far, and whether he thinks they are on track to make a real change in America, or they're just like every other government agency and destined for failure. We're going to get his thoughts on JD Vance's recent comments lamenting the loss of free speech in Europe and the backlash he's faced so far from EU members, and so much more. Strap yourselves in for my conversation with Peter Schiff. Peter Schiff, it is great to have you back on the program. Always enjoy our conversations. I want to start off with a broad question, and that is, what are the main themes and trends you're watching right now when it comes to financial markets and the economy that you think more investors should be paying attention to?
Well, I'm watching a few things. I'm watching the price of gold, obviously, hitting another all-time record high today, now less than $50 away from 3,000. Which seems like a very significant milestone. I'm watching silver, which looks like it's finally putting in a bottom here against gold. I'm starting to see some price action. It looks like there's some unwinding of some long gold, short silver spreads, which I think is bullish for the metals. The gold stocks, are finally starting to catch a bit of a bid. They really need to be a lot higher. Gold is up about 50%. In the last year, and the gold stocks really haven't gone anywhere. In fact, gold hit 2,000 in 2020 before finally breaking through it last year. But in 2020, the gold stocks were higher than they are today, and even though gold is 50% higher at their peak. So, I'm looking at that. I'm also looking at yields on the 10-year Japanese government bond, which I think is a big potential problem that people are just glossing over right now. The yield is at 1.45%. That is a 15-year high, right? It doesn't sound like a high yield, but when you have over 200% debt to GDP, it's a big deal, especially when rates have been, 25 basis points. In fact, rates were negative for a while on the 10-year. But I think we're going to keep rising. I think we're probably going to break 2% before the end of the year and then move quickly up to 4%. And I think that's a big deal. And I'm looking at the dollar yen, the dollar, now breaking down back below 150. I think a key level to watch is $140 yen. I think if the dollar drops below 140, it can be a precipitous decline. In fact, the dollar is starting to roll over across the board. It's down quite a bit today, as the Dow is down, 600 points or so. But I think that we're starting to see some of these problems that are brewing beneath the surface here. You have this very positive narrative that permeates the market, especially with Trump, that everything is great. It's a new golden age in America. We're finally going to make the rest of the world pay their fair share. But I think the Trump trade could be played out, and I think the reality is very different. I think that the U.S. economy has been in recession for a while, probably all of last year, but the data just was rigged not to reveal it. I think that we will lay that bare this year. And we'll see the underlying weakness in the economy. At the same time, we see a resurgence in inflation. So that stagflation scenario is really end game for the Fed. They've got no contingency plans for that. There are no banks that could survive stagflation. That's why they don't even stress test for it.
Hey guys, just a quick break to hear from today's sponsor, ARK, silver, gold, osmium. They offer personalized service and competitive prices with no minimum purchase for silver, gold, platinum, or osmium. Here's just some of the comments left on this YouTube channel about ARK SGO and owner Ian Everard. Have bought from ARK, good source and price. I cannot say enough good about Ian and his company. He is the most honest individual I could find in order to buy precious metals. If you are looking to buy precious metals, I recommend Ian at ARC Silver. He is a straight shooter. So go to arcsgo.com and contact Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you. Well, so many threads to pull on there. I want to start by quickly touching on the Japanese bond yields rising, because for those who don't follow the Japanese bond market, they might think, what's the big deal? That doesn't sound very high. Why does this matter? So how would you break it down? Why is this a cause for concern?
Well, the yen carry trade, which is basically borrowing money in yen and then investing it in higher yielding assets around the world, has been a very important factor in the elevated asset prices that we have around the world. And to the extent that that trade is unwound because the cost of the carry is rising, especially if the yen now starts to appreciate with rising interest rates in Japan. We get Japanese CPI coming out later tonight. They're expecting 3.9% year over year. I mean, that's a lot of inflation, 3.9% when your 10-year is yielding 1.45. That doesn't make any sense. For a while, Japan had inflation, close to 1 or lower than 1, but now you're looking at 4% year over year. Yields have a long way to go up. So this is like a giant margin call, because the Japanese, or not just the Japanese, I mean, a lot of hedge funds took advantage. You didn't have to be in Japan to borrow in yen, right? The whole world was borrowing yen and then buying risk assets. And that would include U.S. Treasuries too. There was a positive carry there. But as that unwinds, it's like a giant, rug pull, because now you have to sell whatever you bought to get back the yen to repay your debt, and so that could have profound consequences, in the United States if a lot of dollar-denominated assets were bought with that borrowed yen.
Well, let's talk about gold here. You mentioned obviously hitting new all-time highs, performing very strongly, and we're knocking on the door of $3,000 gold. I know you think we have a long ways to go in this gold bull market. You mentioned last time we talked that you think gold could at some point go parabolic. Do you think once we get to 3,000, that nice big round number, it's an important number perhaps from a psychological perspective, will that cause the mainstream press to sit up and pay attention? Will this cause more institutional investors to sit up and pay attention? What are your thoughts there?
Well, I mean, they didn't care about 2,000, so I don't know why 3,000 would be much different. So I don't know if it's a number that's going to be the catalyst for investors to wake up, not only to the opportunities in gold in the bull market. Gold is now up tenfold since the low in 1999, 2000, 2001. It's outperforming the S&P. They were talking about the S&P hit a new all-time record high the other day, but compared to where it was January 1st of 2021, the S&P was down about 57% if you price it in gold. So, for all the, the hype in the stock market, it hasn't even beaten, a bar gold, right? And so it shows you that really what we're looking at is inflation, not legitimate increase in value. But I think at some point, investors are going to look at the bull market they've been missing. In fact, all last year, investors were selling their gold, and that's carried into this year. Americans have been net sellers of gold. They've been liquidating gold ETFs. They've been selling their physical gold. I know that just from my own gold company, where we've been getting a lot of people calling us up to sell their gold. There's been net outflows out of all the gold stock ETFs over the last year and so far this year. So Americans have been completely missing from this bull market. It's mainly been led by emerging market central banks, who have been the big buyers. And they're not anywhere near done buying. They're really just getting started. They have a lot of gold to buy. So when the public starts competing with the central banks, then I think you're going to see an acceleration of the uptrend. And I think then it'll spill over into silver, because the central banks haven't been buying silver because they don't really have a place to store it, so they buy gold. But the public will buy silver. So I think silver has even more short-term potential than gold. And I think money's going to come into the mining stocks. I think Wall Street is going to take a look at stocks that are trading. I mean, the big stocks are trading at very low multiples, low double digits, 11, 12 times earnings. And that's, trailing earnings. Their actual earnings for 2025 will probably be so much higher than what analysts estimate that most of these big stocks are probably sporting PEs of like 7 or 8. Compare that to, look, Walmart, which is down 6% today, is trading at 40 times earnings. Why pay 40 times earnings for Walmart? How fast could they grow their earnings? They don't have anywhere near the earnings growth that you're going to see in these gold mining stocks that are trading for, a fraction of the valuation of a Walmart.
Yeah, I want to talk about the gap in valuation between gold and gold miners. It's something that comes up often on this show. It was recently at the Vancouver Resource Investment Conference. It was one of the biggest topics at that conference as well. Why do you think this valuation gap exists? Why hasn't the market caught on? I think you posted on Twitter at one point that investors were climbing a wall of worry when it came to the mining stocks. Walk us through what you're seeing there, the catalyst that you think could close that valuation gap.
Well, I think it's mainly a function of the expectations of future earnings. I think the analysts that cover these stocks and stock market investors in general, they have no idea why gold is going up, and they assume that it's just a fluke and that gold prices are going to come back down. And so they're not willing to put a lot of value on gold companies' earnings because they don't think the earnings are sustainable. Meanwhile, they look at the increasing cost of mining and they assume that that's going to continue. So they think it's going to continue to get more and more expensive to mine gold, but they expect the price of gold to come down. So it really is going to take a change of that perspective. Now, of course, at some point, gold prices will go up so much that it doesn't even matter if they come down. In fact, I think we're already at that point. I think even if gold went back to $2,000 an ounce, I think these mining stocks are still a good deal. But gold's not going back down to 2,000. It's more likely to go to 4,000 than 2,000. And so analysts have to start, pricing this stuff in and realizing that there's tremendous potential. Now, if they don't realize it, the companies themselves will. These gold companies are increasing their share buybacks. And so if Wall Street won't buy the stocks, the companies will buy the stocks. And they have massive earnings to do it with. And a lot of these stocks have got great balance sheets now. They don't have a lot of debt. They got a lot of cash. They're earning tremendous amounts of cash. There are companies that are able to mine golds for under $1,000 an ounce. Most of them, the cost is maybe $1,200 to $1,400 an ounce. But when you're talking about $3,000 gold, there's a lot of margin in there.
And silver, we're at around $33 as we sit here right now. I was speaking to Michael Oliver recently, and he pointed out that actually when we look 1 year to February last year to today, silver has actually outperformed gold. Silver investors obviously looking back to previous all-time highs to that $50 level. But when we look in real terms, silver would have to go to triple digits to get back to that all-time high today. So clearly there's a lot of room to run. What are your thoughts on silver at present?
Yeah, it's because the public has been missing, and the public is usually the buyers of silver, not the central banks. They say it's the poor man's gold. When gold got up near 2,000 in 2011, when the public was involved, when the Fed was doing QE and everybody was worried, and gold prices got up to 1,900, silver got up to 50. Now gold is 50% higher than it was at that peak, and silver is 40% lower, right? So silver's got a ways to go, but once it really starts to break, I don't know where the key level is. Is it 35? Is it 40? Where it is. But I think when it goes through 50 next time, it's going to go through it, like that proverbial hot knife through butter. And then I think 50 is going to become the support level for silver. I don't know how long it's going to kind of base build at around 50, low 50s. But then I think it could quickly double to 100. especially if gold keeps rising. So if gold goes to 3,200, 3,300, I think in that environment, silver could go to 100, and it would still not be expensive relative to gold. It'd still be pretty cheap.
Well, I want to highlight a couple of tweets you made recently. They're short and to the point. I'm going to put them together. You said it's impossible to have a government program without waste, fraud, and abuse. Government programs almost always achieve the opposite of their stated intent. The DOGE committee has certainly uncovered a lot of waste and abuse. I wonder what your thoughts are on how that program is progressing. And as a government program itself, could DOGE actually end up achieving the opposite of its stated intent in the long run?
That would mean that DOGE would, instead of saving us money, would end up costing us money. And in my quote, I said almost all. So maybe DOGE could be one of the exceptions where they do end up with some savings. Now, I don't believe the savings will be nearly as substantial as the numbers that are being bandied about. But it shouldn't surprise anybody that they're uncovering waste, fraud, and abuse. As I said, you can't have a government program that doesn't have waste, fraud, and abuse. That's why you want to minimize the government programs, because you're always going to have that problem. I mean, the reason that there's always waste is because there's no incentive to be efficient. In the free market, if I own a business, I need to be efficient because I make more money if I'm efficient. That's my money. I want to spend it wisely. And if I'm not efficient and my competitor is efficient, he's going to take my business. He's going to undercut me. So you have forces for efficiency, but in government, no one gives a damn. It's not their money. Who cares? In fact, the incentives are actually to spend as much as possible, because then you get a bigger budget, then you get more power. So the incentives are all wrong in government. And, there's so much fraud and abuse, much more so than in the private sector. Look, if somebody tried to steal my money, I'm gonna try to prevent it. And if somebody steals my money, I'm gonna notice it's missing, right? I mean, I take care of my money. But the government is enormous. It spends $7 trillion a year. There's hundreds of millions of people. You think they know when somebody rips them off? It's impossible. And people love to rip off the government. They love to, whenever the government creates a program, people will alter their behavior, alter their circumstances to qualify for that, right? They'll abuse the program, and some of them will commit outright fraud in order to qualify for the program, and the government doesn't know. I mean, look at what happened with the PPP program. And I called that out, when they first passed it, about how much fraud there would be there, because it was an open invitation to fraudsters, because the government said, we're not even going to verify anything. It's just everybody's on the honor system. Oh yeah, well, nobody's got honor when it comes to stealing money from the government. And especially, you get to a prisoner's dilemma where all your friends are stealing from the government and you feel like an idiot if you don't steal too. Right? And so it's not a surprise that they're finding this stuff. I just like it that a lot of people that didn't realize how bad government is, how corrupt government is, how dishonest politicians are. This is great that, we're shining a light on that. And so maybe we'll create more libertarians as a result of this public outage. But, I don't think that DOGE is going to be a get out of jail free card to allow massive tax cuts and pay down the national debt. I think that the savings that will come out of DOGE will offset some of the increase in the deficits that are going to happen anyway. So it doesn't solve the problem. It mitigates it somewhat, but not enough, to get us out of jail.
Well, speaking of waste, fraud, and abuse, I wonder what your thoughts are on Trump's meme coin, Melania's meme coin, and the Libra meme coin in Argentina. Apparently, it was the same team of people responsible for launching Melania coin as launched the Libra coin. All of these massive rug pulls, supposedly insiders dumping on the retail public. Why would presidents get involved, and first ladies, for that matter, get involved in insane crypto schemes like this?
Look, Trump is still selling his watches. I see those commercials all the time. Trump is a promoter. He's a marketer. He's got a lot of business partners, and they made a quick buck off of this. I was embarrassed by it. I wish he hadn't done it. But it does shine a light on the absurdity of crypto, including Bitcoin, because I don't see really fundamentally the difference between a meme coin and Bitcoin. Bitcoin is a meme. The meme is that it's digital gold. I mean, it's not, but people think it is. But at the end of the day, there's a lot more that Bitcoin has in common with Trump coin or Melania coin than they have differences. And I really think it's unfortunate that Trump has aligned himself with so many people in the crypto industry. I mean, yes, he got a lot of money from them. He got a lot of votes. Maybe that was the difference in winning the election. You never know if they tip the scale. But they certainly helped. But he needs to just distance himself from that now. We certainly don't want to establish some kind of reserve of Bitcoin and use government money to buy Bitcoin. That would waste all the money we've saved from DOGE. In fact, I'd rather have people send Social Security checks to dead people than buy Bitcoin. Bitcoin would be a bigger waste. So hopefully that doesn't happen. But yeah, and it wasn't just the insiders. Look, there's a kid in my neighborhood, 21-year-old kid. I don't know him, but somebody sold him a house over the weekend for $2.1 million, a little house. And he said, yeah, this kid made $10 million. He's 21, so he just bought his first house. He made $10 million on Trump coin and Melania coin. But he wasn't an insider, but apparently he was watching very closely, and he bought Trump coin at 27 cents. And he sold most of it, just at a couple of bucks. He didn't have it when it was $75, but he got in and out and made himself, between those two coins. And he also was in on Libra. He made money there. He's ready. He's got some kind of program. The minute they launch, he just goes right in and buys and then immediately sells, right? He doesn't stay in very long, right? He just gets in and out. But he's a 21-year-old kid. Now, he made $10 million. Where'd that money come from? Did he add any value to society that he was able to get $10 million? No, he didn't add anything. That money came from the 10 million that somebody else lost. Right? That all these coins are a zero-sum game or a negative-sum game because there's a lot of costs associated with organizing them and promoting them and making them work. But when somebody makes money in crypto, it's because somebody else lost it. And the same is true with Bitcoin, except that the people don't know they've lost it yet. Like a lot of people have made money in Bitcoin. They bought Bitcoin and they sold the Bitcoin at a higher price, and then they bought stuff with it. Now, the reason that they were able to sell Bitcoin and buy something with it was because somebody else bought Bitcoin. Now, the person who bought that Bitcoin, since the price of Bitcoin is way up still, he doesn't realize he's lost any money yet because it's still in this pyramid scheme. But eventually, the people who still own Bitcoin are going to want to sell theirs because they're going to want to buy something. They're going to want to buy a house. They're going to want to buy a car or a boat or take a vacation or whatever it is they're going to want. And then when enough people decide they want to get their money out, they're going to realize it's not there because then the whole thing collapses. And then the people realize how much money they lost. Now, of course, if you sell now, you haven't lost your money because you get out. It's like a game of musical chairs. But when the music stops, if you're still holding Bitcoin, you lose. Right? But that's why they tell everybody, never sell your Bitcoin. Right? Who made that up? The people who want to sell their Bitcoin. They made that up so other people won't sell theirs, so they can still have a market to get out.
I want to get your thoughts on JD Vance's speech recently in Germany, where he pointed out that free speech is in decline in Europe. As a rule, I don't really trust any politician, but I think what he said seemed to ring true to me, at least. It feels like free speech is in decline. I think it was in America, and perhaps this is one of the positive points of the Trump presidency and having Elon Musk involved, is at least they're highlighting free speech as a right and pushing for it. The members of the EU seem to be freaking out about this speech made by JD Vance. I mean, why is there pushback against this type of thinking? What are your thoughts?
Yeah, I mean, well, first of all, right, when you live in a glass White House, maybe you shouldn't throw stones. But yes, I mean, free speech was in decline in America too. And Trump has now reversed that decline, which is great. And which is one of the reasons I supported Trump, was because of his views on speech. And yes, I mean, they, they need to make the same turn in the UK. But we have to be, careful of how badly we criticize them, because, just a few months ago, we were doing the same thing. So, but also, there are a lot of other things that America does wrong too. So it's hard for us to go lecture the Europeans when, we got our own skeletons, so we got stuff that we got to fix, and instead of just scolding others. Yeah, like I got plenty of criticism for, both Europe and the United States. There's a lot of stuff that we're doing wrong. But it does irritate, when, imagine if some European politician came to America and just started trashing us, right? Made a speech, in some U.S. city and started, we probably wouldn't like it. And the problem with, poking a hornet's nest is, Trump has got the whole relationship that the United States has with the world backwards. According to Trump, the world is taking advantage of us because of the trade surpluses that they have with the United States. The reality is it's the reverse. We're taking advantage of them. It's like the movie, the book rather. They made a movie out of it, but the book, Tom Sawyer, where Tom convinces all the kids in the neighborhood to whitewash his fence. And he says, oh, this is so fun. You get so much enjoyment out of it. It's fantastic. And so he just kicks back, rests, drinks some lemonade, and he watches all the kids do his chores, right? And he doesn't have to work. Well, we've got the whole world painting our fence. The whole world is manufacturing stuff, and they send us over $1 trillion a year worth of real goods that make our lives better. And what do they get in return? Well, the paper that we create out of thin air for nothing, at no cost. We just create some dollars and say, here you go. And so they've got the short end of the stick. We have real stuff, and they've got our worthless IOUs. Now, they're taking those IOUs and they're using them at the moment to buy assets. They buy bonds, which, they shouldn't buy, but they buy real estate in America. They buy U.S. stocks. So, yes, in the long run, they're better off because they're getting richer because they're buying our assets, and we're basically selling our cows and then buying their milk. So we're selling off the farm. But in the short run, we're drinking a lot more milk than we would be able to get from our own cows. But if this relationship stopped, if the trade deficits all of a sudden disappeared, the U.S. economy would implode, because there'd be nothing to buy. The shelves would be empty, and so the service sector economy can't function without the goods. Now, a lot of people say, "Well, we'll just make all that stuff ourselves." Yeah, how? If we could make it ourselves, we'd be making it right now. Now, yes, over time, can we make all this stuff? I guess, but it's going to take a lot of investment. And to get the money for the investment means we have to stop spending so we can save money. And then people can use those savings to build out the factories that we need, to rebuild the supply chains, to train the workers. I mean, all this is going to take many, many years. And between here and there's a massive recession where we're also going to have a financial crisis. Because if you've built up a phony economy on debt-financed consumption, and all of a sudden that stops, yeah, everything implodes. Now the banks go under. People that borrowed money to finance that, they can't pay back the loans. Asset prices collapse. So there's no way to achieve the goal that the president has, which is a good goal, right? To be able to get rid of the trade deficits. He ran on that during his first term, and the trade deficits got worse during his first term. We had record trade deficits under Trump, but then we broke those records under Biden. And we'll probably break them again. The tariffs aren't going to do the trick. But, his heart is in the right place in that, yes, this is not a viable situation. We can't take advantage of the rest of the world forever because they're going to get tired of it. But to the extent that we accelerate that eventual epiphany on their part, we're going to have to pay the piper sooner.
You brought up the tariffs there. I'm wondering, is there any case to be made for these tariffs being beneficial? The latest is a 25% tariff on autos, pharmaceuticals, and chips. He's put a freeze on the tariffs on Mexico and Canada for now, but I believe at the beginning of March, those are set to come into effect unless some negotiations come into play. We'll have to see how that all plays out. Is this part of the art of the deal? Is he just doing this to get into a favorable position to then negotiate from?
To
Is he very
negotiate what?
serious? Yeah.
I don't know. I don't know what he wants to negotiate. But all the tariffs are going to do, in the most part, is raise the prices of everything that's subject to tariffs and raise some revenue for the U.S. government, which the U.S. government badly needs. But all of the increase in costs won't be collected by the government, because Americans will respond to the tariffs either A, by buying the tariff goods, and in which case the government collects the 25% tariff and Americans pay 25% more, and that tariff is a tax that the government collects. Or they don't buy that product. They buy something in America instead, and the government doesn't collect anything. But if they buy something in America that in some way competed with those tariff goods, they're going to pay more money for it than it would have cost if they bought it before the tariffs, right? Because the reduction in competition enables the domestic producer to charge more. So in which case the consumer pays more, but the government doesn't collect more. Now the U.S. company, right, benefits because it got to sell its products at a higher price. So the owners of that business will benefit at the expense of the customers. Maybe the workers will benefit. Maybe they'll be able to get a higher salary, right? So that just transfers money from some people. There's winners and losers from the tariffs. But another impact of the tariffs is prices will go up for a lot of goods, but that means they'll go down for other goods, because if consumers have to spend more money for a lot of the goods that they need, they have less money left over for some of the services that they want. And so if you're a provider of those services and you want to continue to have customers, you may have to reduce your prices. And so that's bad news for a lot of service providers who are now going to get less income because their customers have less money to spend. So there are going to be, winners and losers from these tariffs, but it's not going to provide the U.S. government with a windfall that's collected from Canada, Mexico, China. The tariffs are going to be paid for by Americans, and they are going to make a lot of goods more expensive. Some goods will be less expensive, but overall, they will hurt in a sense that all taxes hurt. Right? Whenever the government taxes you, it's a negative. Now, if the government is spending money and not taxing you, that's worse, because deficits actually are a worse tax than paying a tariff or paying an income tax, because the real cost of government is what it spends. So the government is now spending about $7 trillion a year, and it's taxing us $5 trillion, right? So where does it get the other $2 trillion? Well, it creates it. It borrows it, driving up interest rates. The Fed monetizes it, driving up consumer prices. We have to pay that tax one way or another. But the tariffs will be more immediately felt by a lot of people than the inflation, which it's already painful. But the inflation in many cases, takes time to unfold, whereas the tariffs hit you like right in the face right away, right? So there's gonna be a lot of people that are gonna, if they put 25% tariffs on cars, a lot of people aren't going to buy those cars, because if they're 25% more, a lot of people aren't going to buy them. Now, what might they buy instead? Maybe they'll buy a used car that's already here, that's not subject to the tariff, or maybe they'll buy an American car, right? Maybe they'll buy, or a foreign car that's made in America as opposed to one that's imported. They might do that, but they may have preferred to buy the import, but now it's too expensive, so they don't buy it.
You brought up inflation there. This is a topic you've discussed a few times on the show now, that you believe inflation has not gone away and we will see a resurgence. This certainly appears to be playing out as the last CPI print came in hot. Of course, those numbers are wildly understating what the actual inflation rate is. The Fed's hammer of raising or lowering rates seems to be ill-suited to the task at hand. How do you think they'll react should we continue to see higher than expected inflation prints?
Yeah, I mean, I think they're already maybe positioning themselves to blame it on the tariffs, which, is a gift that Trump has given the Fed, and, an excuse. But, we've had 4 consecutive months of accelerating CPI. It went from 2 to 3, from point 2 to point 3, point 3 to point 4, point 4 to point 5. And so now you're talking about 6% annualized inflation, 6.2 if you take the last month. If you take the last 3 months, it's 5% inflation, 4.9. So we're certainly heading in the other direction from 2. And if you look at the 25% plus surge in commodity prices that has taken place over the past year, and figure that a lot of those price increases haven't even made their way into the CPI yet. There's a lot of price hikes coming in the future, because the numbers benefited because we had a big drop in commodity prices that helped bring down the CPI in 2024. But now we have a big surge in commodity prices in 2024 that's going to be pushing up the CPI in 2025. So we're going to get a big surprise. A lot of people are going to be surprised, and the Fed is completely asleep at the switch, or deliberately ignoring what's happening. They claim that they have restrictive monetary policy. They don't. Policy is still stimulative. They never actually got into restrictive territory. They aborted the hiking the minute banks started to fail, but they hadn't put that inflation genie back in the bottle. It was going to take a lot more work to do that. Remember, in 1980, interest rates got to 20%. And, inflation, CPI, never got any higher than 13%. Of course, it was a much more honest CPI back then. But even if you say, okay, based on our dishonest CPI, yields were 9%, how did we stop that inflation with a 5% Fed funds rate? We didn't get anywhere close to 9, let alone above it. So the Fed aborted too soon, declared victory, too early. We did get a temporary reduction in the rate of inflation, right? It went from 9% to 3%, but now it's headed back up again. And if the Fed keeps rates where they are, at some point, not too far away, we'll be back at 9% again or higher. The Fed needs much higher interest rates. The problem is we're too broke to afford it. In 1980, we could afford 20%. we couldn't even afford 5, right? That the banks started to fall apart. So the Fed had to back off.
Well, Peter, this has been a fantastic conversation. Greatly appreciate you coming back on the show. Tell us about Euro Pacific Asset Management, Schiff Gold, and the Peter Schiff Show.
Well, Euro Pacific Asset Management is my asset management company. We manage separately managed accounts. We do have a gold strategy that's all in mining stocks. We also have a dividend strategy and a value strategy, mainly focusing on international stocks. So if people are interested in having us manage their portfolio, they could inquire at europac.com. We also have 5 mutual funds that we manage that you could buy no load at any of the discount brokers, including a gold fund. And you can also buy those funds no load directly on our website. So if you don't have a brokerage account and you just want to get into our funds, you can invest, just through our website at europac.com. You don't have to talk to anybody. Just go in there and read a prospectus and do an ACH deposit. And, you've got money in the fund. I think these funds are going to do very well over time as we move through a stagflationary global environment, particularly here in the U.S. If the dollar falls the way I think it will, and commodities, emerging markets, and gold perform the way I think we're going to have tremendous returns in this investment strategy. What else did you ask me about besides?
Schiff Gold and the
You asked
Peter
me about
Schiff
three
show.
things.
Yeah.
Oh yeah, well, Shift Gold is where you go to buy physical precious metals. If I was going to buy physical right now, I prefer silver to gold. So, people should be buying silver at $33 rather than gold at $3,000. But actually, I think that the mining stocks are actually better than either. So I think that's what people should be doing right now. If you've sat out this gold bull market, for the last 20, 25 years, don't necessarily start buying at 3,000. Buy these gold stocks, because when you buy gold stocks, you're buying below ground gold. You're still buying gold. It just hasn't been mined yet. But I think that gold that's still in the ground is really cheap right now. And by the time they get it out of the ground, several years from now, I expect the gold price to be a lot higher. So, gold moves from 3,000 to 4,000, and you buy gold, maybe you make 30%, right? 33%. But if gold does that over the next year, I think gold stocks will go up at a minimum triple, if not more. So, 10x the returns. And I see minimal downside risk in these stocks, right? That certainly nowhere near the upside potential. I would be focusing on the gold mining stocks, buying the Euro Pacific Gold Fund at the moment. Just a better relative buy. The Peter Schiff Show is my podcast, which I do usually once or twice a week. On the rare occasion, there'll be 3, but it's typically 2, sometimes 1, depending on how busy I am. I do these things live, so if you want to, tune in live and see me, because I do it video as well, you can go to the YouTube channel, Peter Schiff Show YouTube channel, or Peter Schiff Report, and I got there's almost 600,000 subscribers there. So you get an alert whenever I'm doing a podcast. You can also listen at schiffradio.com, which is now hosted by Schiff Sovereign, which is where my free newsletter comes from. If you want to sign up for my free newsletter, we have usually 2 or 3 a week to come out at schiffsovereign.com. Just sign up. We also have a paid service too. That's what is it? I think it's like $11, $9 a month or something like that to get into the paid service. But we have a lot of good information that we're putting out at Schiff Sovereign, so people might want to go there as well. But follow me on social media. My most prolific platform is X. I've got about just over 1.1 million people who follow me, and all my posts are mine. I mean, I don't pay somebody to compose them. I have a thought and I put it out. Like you read a couple of my posts earlier, right? That's just from me. And so if you want to know what I'm thinking when I'm thinking it, follow me on X and then share my post, because I think I'm putting out a lot of really good information. I'm waiting for Elon to start sharing some of them or liking them. He hasn't. The last time he did something with me, he called me a dick because he replied to one of my posts with an eggplant. Although there was one other time I congratulated him on something and he thanked me or something. I forget. He acknowledged it in some way. I think he said thank you or he liked it. I don't know. He responded, but that's been a while. It's been a while since he's. I put out a lot of good content. I hope he notices. But it's not all flattering. I criticize Trump when criticism is warranted, and I praise him when I think he's done something that's worthy of praise, which is rare because Biden did nothing that was worthy of praise. I criticized everything he did. So the fact that I find some things that Trump is doing that I like, that's good. But I don't like the people who think he can't do any wrong and just think everything he does is great, because it's not. And that's very dangerous, because a lot of bad stuff's going to happen. And I don't want it blamed on freedom, of capitalism, on a lot of the things that people believe Trump stands for, because he doesn't really stand for those things. He's not a libertarian by a long shot. He's not even a conservative. He's a populist. He has some conservative values, but he has a lot of things that he believes are not. And again, and some of the things that he said to get elected, you don't know if he actually believes it or not, because he's a salesman. When he was selling Trump steaks, he said they're the greatest steaks in the world. Now, do you think he believed they were the greatest steaks in the world? No, but he was a steak salesman, so he puffed it up. So, you don't know. Trump says, well, I was president. It was the greatest economy in the history of the world. People were amazed. Nobody could believe it, how great it was, which, of course, is a bunch of nonsense. I don't know if he believes that or if that's just the salesman in him coming out, right? So, but, we're in for some tough times. It's not morning in America. It's not a new golden age. It's a good thing that we don't have Harris, and Trump is doing some good things. But my concern is that the wheels come off the bus, and the Republicans lose the House and the Senate in 2026, and then they lose the White House in 2028.
Yeah, some great thoughts, and completely agree with you about the polarization when it comes to Trump. I have a lot of people who watch this show who will support him no matter what, think he can't do any wrong. And I always get attacked in the comments whenever I point out any inconsistencies, as you have. So definitely appreciate that more nuanced point of view. I will put links in the description below to all of your endeavors so people can check them out. Thank you once again, Peter, for coming on the show. It's been a blast.
Oh, all right. Hey, Jesse, thanks a lot. And we'll do it again.
And thank you for joining us today. This episode is brought to you by ARC Silver, Gold, Osmium for all your precious metals needs. Head to arcsgo.com and contact owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to tell him that Commodity Culture sent you, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.